I'm Jon Schwartz, a real estate investor, house hacker, and realtor in Los Angeles, California. You're watching Investment Property Nerd, and this is my weekly LA real estate update for December 28th, 2020. Each Sunday, I review the week's MLS activity for Los Angeles County to bring you the latest in what's happening in our market. These numbers come straight from the MLS, and you won't find these graphs anywhere else because I make them. If this is your first time watching the weekly update, here's a quick explainer. Each graph covers the previous 12 weeks. The bars represent actual weekly numbers, and the lines represent a 4-week trailing average. This smooths out the noise and helps us identify trends. If you'd like to talk further about how the current market impacts your investing, or house hacking, or just savvy home buying, shoot me an email at john@investmentpropertynerd.com. All right, let's get into the data. So first we start with single family listing activity. This week saw a contraction in the market because it was Christmas week. We had 361 new listings, 259 sales, and 174 properties taken off the market because they were expired, withdrawn, or canceled. You can see a similar contraction of activity about 5 weeks ago. That was Thanksgiving week. This is what happens when the holidays come. People pay attention to the holidays, and there are fewer business days in the week. You can also see over the past 12 weeks a general contracting of the market. This is what happens in the winter. Activity slows down, it picks up again in the fall. What I'm looking at is the net change in listings. We're about where we were 12 weeks ago at 143. 12 weeks ago we were at 121. That's a slight opening of the market, but not enough to mean much. All right, let's look at sales activity. All right, so here we have 3 graphs that show sales activity for the single family market over the last 12 weeks. At the top in red, we have the average price per square foot. In the middle in blue, we have the median days on market. And at the bottom in gray, we have the list price to sales price ratio. Let's go through each one. Looking at average price per square foot, you can see that homes in Los Angeles have been getting more expensive over the past 12 weeks, and especially have been getting more expensive over the past 6 weeks. We were at $562, and now we're at $657 per square foot. This would indicate a market that is still very hot, very seller friendly. Going to median days on market, we're now at 20, whereas 12 weeks ago we were at 10. Even 6 weeks ago, it looks like we were at just 11. So in the past 6 weeks, while homes have gotten more expensive, they've also sat on the market longer. Interesting. And finally, looking at list price to sales price ratio, we see a dipping in the past couple weeks, but really not significantly, from 99.82% 12 weeks ago to 99.1% today. That's effectively the same. Homes are selling for just under what they're being listed for. So putting these together, we see a single family market that's getting a little more expensive, but also properties are sitting on the market a little longer. I'm interested to see what will happen when we get into the new year and the spring season starts to heat up. Let's go to condos. Here we have condo listing activity. This past week, 161 new condos were listed, 124 were sold, and 115 were taken off the market because they were expired, withdrawn, or canceled. As with single family homes, you can see that this past week was very contracted because of Christmas, akin to 5 weeks ago when we had Thanksgiving week. And overall, we can see a general contracting of the market as we enter the tail end of the year. Looking at the 4-week trailing average for net change in listings, we see that many listings were coming to market 12 weeks ago. That flattened out around 0 6 weeks ago, and now we're back at an average 31 new listings per week. Now, the condo market, since the pandemic broke out, has been more favorable to buyers than the single family market because there's been more inventory as sellers have been happy to sell their condos to buy houses out in the valley and that kind of a thing. It's interesting to see that the inventory got a little tighter right around Thanksgiving and now is opening up again. We'll have to see what happens in the new year. Let's go to condo sales activity. All right, so condo sales activity tells a story that's similar to single family sales activity. We have average price per square foot growing over the past 12 weeks, especially over the past 6. We have median days on market just about doubling over the past 12 weeks. And we have list price to sales price ratio declining, but statistically not a lot. Certainly more than in the single family market, but still only about 1 percentage point, a little less than. Again, these graphs present 2 different stories, and we'll have to see which one wins. When you look at average price per square foot, you see a market that's heating up. When you look at median days on market and list price to sales price ratio, you see a market that's cooling down. One tea leaf I am paying attention to is that average price per square foot has more or less flattened out over the past week or two. Going into 2021, I wonder if we'll see that begin to decline as median days on market stays high and list price to sales price ratio remains relatively low. Now let's go to residential multifamily. So here's listing activity for residential multifamily, which as a reminder means duplexes, triplexes, and fourplexes. Now, as with single family and condos, we had a big contraction in the market this week. Only 49 new listings with 28 sales and 36 listings removed from the market by way of being expired, withdrawn, or canceled. Again, this is much like Thanksgiving week 5 weeks ago. However, the residential multifamily market is not quite as cyclical as the single family and condo market. You don't see the overall tightening that you saw as we reached the end of the year. And in fact, the net change in listings, the 4-week trailing average, is about where it was 12 weeks ago. We were at 25 12 weeks ago, and now we're at 22. Simply put, residential multifamily doesn't have the same cyclicality as single family and condo because the buyers are mostly investors, not parents or families or yuppies or people who are figuring out how the home purchase fits into the rest of their life, the school year starting or ending, the lease starting or ending, etc. Looking at residential multifamily sales activity, we have average price per unit, which I like to look at instead of price per square foot in the residential multifamily space. That's risen a bit over the past 12 weeks, not significantly. Median days on market has about doubled in the past 12 weeks, again, not quite a doubling. And the sales price to list price ratio is a little more wobbly than with single family and condo, but we've landed just slightly below where we were 12 weeks ago. What does this mean? Again, it's like a tale of two cities, and we'll have to see who wins. Average price per unit has been steadily increasing, but also so has median days on market. I don't think list price to sales price ratio tells us much in this case because it's so up and down, and we're about in the same place where we were. But going into 2021, we'll have to see if residential multifamily prices continue to rise or if median days on market continues to rise. Thanks so much for watching this weekly market update. In the coming weeks, I'll be adding other important indicators such as LA County COVID case counts and LA County unemployment numbers. Please subscribe so you can get those videos in your feed and stay on top of the market. Throw any questions in the comments below, and I'll see you next time on Investment Property Nerd.